right, just overall, I'll start with you, Lori. Are you basing things on a determination of what happens with trade, or do you have two scenarios, one if things work out and one if things don't work out? Or do you have to decide what's going to happen and make a determination based on what you think, whether we get a deal or not?
Well, we certainly have our base case, which is that we think that there's not going to be additional escalation from here. So disappointing that they couldn't come to terms, but I think largely many companies have already factored in these kinds of hikes as one of their base cases as well. The good news is they're still at the bargaining table, though, so there could be some upside from here if they don't deteriorate and if they actually start to, have those discussions be a bit more positive.
We don't know what China's reaction is going to be to the tariffs. They've said that there will be a reaction. We assume that it's going to be something that's moderate, that is seen as an equal, and that the United States doesn't react to that.
Well, look, both sides have a lot to lose here if things deteriorate. I mean, China clearly has been trying to migrate their economy. They're slowing in terms of overall growth. So in some sense, they have more to lose than the U.S. does at this juncture. But both sides really have a lot to lose. This could result in higher inflation. It's a lot more uncertainty in the business community. And ultimately, we're seeing in the markets that gyration as it looks like the clouds are clearing, and then it looks like all of a sudden we might be having a storm again.
A lot of people say that it's impossible for China to change as much as we'd really like them to, and the best we get is like either superficial or half measures that maybe make us feel a little bit better, but really don't change anything. Or is it possible that they decide, look, we're going to be doing this for the next 50 or 100 years. We're going to start, adhering to global order and things that other countries, because they don't now.
Well, what's been disappointing about a lot of this is that the U.S. in some sense has been going it alone. I think there needs to be pressure not just from the U.S. but from the Eurozone as well.
We tried, though, for years and years.
We have, but again, I think that these deterioration in trade talks may lead to people realizing that it can't be just a bilateral discussion, that it has to be broader. And ultimately, China has been a bad actor on the global stage, and there needs to be reforms.
So, Alec, you determine what's going to happen, or you have contingencies either way with what you are telling investors?
I think, as recently as a week ago, you kind of had to be binary because the market was pretty priced for perfection. They were pretty complacent on this issue. But now that we've clipped off 5%, I think in a way it's healthy because expectations have become much more muted. We'd like to hope that the $325 billion in additional tariffs doesn't go into effect. And thankfully, even if they wanted to do that, apparently it takes weeks and months to put that into place. It's not something. It's just the procedures around. They have to consult with the business community. It's apparently not something that's done, and the administration's sensitive to adhering to some of these administrative policies.
Would it change your mind if that went on all $500+ billion?
I think really the way we're thinking about this, as Lori rightly pointed out, companies, a lot of the big multinationals have factored in this possibility of a move to 25 from 10 on the $200 billion. I think this dents earnings. It puts a lid on the market. So if you were hoping for new highs, repeatedly, you may be a little disappointed in the near term, but we don't think it's a repeat of Q4, which I think is what most investors worry about. Ultimately, this might, worst case, take S&P earnings from 170 down to 160, but it's not a recession where earnings fall 20-25%, and you've got to take 3 multiple points off the S&P. Maybe you go down to 16 times 160. If you do the math on that, it's a corrective environment. It's not a crash or a bear market. We have to remember that so far most of the tariffs are on capital and intermediate goods, not consumer. The next 325 would hit the consumer more. So given that we're a consumer economy, that would have a bigger earnings impact. But all in all, we still see small caps, domestic sectors, just even high-profile discretionary names, Costco's, Home Depot's, Starbucks of the world, McDonald's, kind of managing through this. So a headwind, certainly, a ceiling on the market, absolutely, but a bear market catalyst, not in our view.
So you're saying that it's not possible with these tariffs to just slap them on that day? I mean, how long does it take to do it? So slap is not the right word then. What word would you use?
You're right, Joe. It gets a little technical.
Well, how long does it take?
Well,
We're saying slap. That's wrong.
I know you love this slap thing. I'm going to get.
Do they not slap them on?
They did because these were already in place. So if they're in
place
already,
slapped? The next ones can't be slapped.
If they're in place at 10, you can slap to 25.
You can.
The new ones aren't on yet, so there's a process. Those you can't slap.
All right.
Thankfully, those would take longer.
Maybe those. Okay.
Yeah.
All right.
So, yeah, I think.
But these were slapped on.
These were slapped. This was a slap.